Welcome to the Stock Market Morning Prep video for Tuesday, November 18th. We get another consolidation day. Markets really did absolutely nothing. Dow Jones was up about $13. NASDAQ down $17. S&P up $1.50 and the Russell down $9.57. This has to change. It's going to change. It just can't be like this for the rest of the 6 weeks that we have left of trading for 2014. It has been extremely quiet for the last 10, or I would say maybe 8 or 10 trading days. After that big move up that we had from the October mid-lows, markets are now consolidating. And do we have signs of a possible reversal? Well, we called that bottom that we said, look for a big bounce here. And obviously that big bounce turned into a full-fledged uptrend in the short term. And now we're looking at, we're at extensions and we are at resistance. So I came out to put out the indicators again and show you that we may be looking at some sort of at least a short-term pullback. And then I think that if we do get this pullback, that the markets would then probably be bought into that dip going into the end of 2014. I don't see anything dramatic happening between now and the end of the year. Obviously, if there is a catalyst, then that's a different story. But if everything stays status quo and kind of quiet, with what's going on in Europe and, of course, Russia and Ukraine and ISIS, and if everything stays status quo the way things are, we may get a nice big push into the new year. And I mentioned early mid-year, I said we're looking at about 2,100 in the S&P, and we're very, very close to that, and I really do think that we can achieve this. But we are very tired. The markets are tired. And I can see it in the price action. There is absolutely nothing going on, and it has been very, very quiet. You hear the pundits, we made new highs again. We made new highs, but we pushed into the end of the day, pushing out and eking out again and closing at all-time highs again. It's easy to achieve when you're at all-time highs already. So now we're consolidating, and which is a bullish sign, but when you have these momentum indicators and these oscillators starting to show signs of waning and less than stellar performance. That's something that I want to discuss with you guys today. Okay, so let's take a look at the New York Stock Exchange 52-week high index. As you can see here, we're making lower lows and lower highs while the market is at all-time highs and has not pulled back here. That is not a good sign. And when stocks don't participate and all you have is the indexes pushing new highs and running up, that's not a good sign. It just means that a lot of the hedge funds and money managers are either going to hedge or look to buy the index because they're underperforming their fund in itself. And we all know that in the third quarter we had mutual funds, hedge funds, mostly hedge funds, really took it on the chin with crude oil and a couple of these big ARB deals that they had go on. So they're going to be chasing performance. So that's why I don't see anything of a major correction happening between now and the end of the year. Although I would have liked to see that. It would have started off the new year right. But if we do get a little bit of a pullback, 3 to 5%, maybe a 2 or 3, 4-day pullback, I think that will be well bid into, meaning that they will be buying the market. Okay, so let's take a look at another indicator, and it's the McClellan Oscillator. Now, we've already came off of extreme overbought readings, so we're at 5%, right? Well, basically at the neutral line. The reason why I'm showing this to you is that there's a lot of room to run to the downside before this McClellan Oscillator can be sold. So that is a good sign. That tells me that we do have plenty of room to run to the downside as far as getting an oversold reading, okay? Now let's take a look at the NYUD, which is advanced decline with volume, which I love to see. Now, this is doing fine, right? We're above the zero line, and that negative 50 here is really where we've held. Now, what I'm looking for is a push down below, but it's not just a push. I want to see the market stay below 50, maybe negative 50, negative 75. And if that were to happen, then I could see this market start to roll back down again, okay? And that's what I'm going to be looking at here in the coming days. Now, we do have options monthly expiration that expired this Friday. So we do have a bullish bias to the week in general. However, seasonality in the Trader's Almanac states that we have weakness this week. This week is known for weakness prior to the Thanksgiving holiday. Okay, so just keep that in mind. Not that it has to happen, but you want to make sure that you at least know that if it does happen, you understand why. I know last of the indicators is the S&P 500 stocks above the 50-day moving average. As you can see, we are at the sell zone area here, 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 and you can see every time we've gotten into these areas and these overbought, markets tend to sell off. So just keep that in mind going into this week. Now, I do see fireworks starting to happen. Now, I love to see a market pull in a little bit here. It's healthy for the markets. There is absolutely not an ounce of selling going on. I don't know why. Markets are really weird. They're funky right now. Coming off of the October lows, we've gone in a straight line, straight up, and then all of a sudden, now nobody wants to sell the market. So it's just very, very odd. When things don't look right, I take a step back and I wait until the market tells me when it's right. Okay, so let's just do that. I think it's the best way of approaching the market, that you have a lot of indecision, a lot of inconsistencies with what's going on with asset classes, correlated assets. That's, to me, is something that I'm going to be watching, and as well as the dollar. When you have the U.S. dollar starting to really start to break to the upside, and here's a picture of the U.S. dollar. Here's the weekly chart of the U.S. dollar. Now, you could see that we're extremely overbought in a weekly chart here, RSI. That does not mean that it's not going to come back in again. I do think in the bigger picture of 2015, I think the dollar starts to break out. This is a huge base, although it's very wide, but it's a huge base. And you could see even another symmetrical triangle that's in here. And when this pulls back, I think it's going to get a lot of pent-up energy, and it's going to unwind its overbought reading. I think the dollar breaks out. I think there's going to be some huge opportunities. A lot of technicians that already see this. So this is normal to see. Obviously, you can see the dollar breaking to the upside. I didn't even show a picture of the daily because it's gone parabolic. And when this happens, it's going to affect a lot of asset classes, sectors, and commodities. So just keep that in mind. Take a look at the monthly chart so you see what I mean. The 89 monthly moving average, it comes in here. The 200-month moving average. I apologize. This is the 89. 89 is the number where that average sits. Now, when that average, though, when we break above that and we can consolidate for a couple of months up on this average, I think all bets are off, and I think you're going to see a challenge of the highs at one point. I don't know if it's going to happen in 2015, but rest assured that will happen, and that will create havoc on a lot of asset classes. So be prepared, especially if you're a longer-term investor. You need to be prepared for this, okay? So now, anyway, back to the indices. That's where I'm looking at as far as the dollar is concerned. So if the dollar continues to break out, yes, we will definitely have a lot of trading opportunity. So there's a lot of times we sit, and like we've been doing for the last couple of weeks, but once the market starts to move again, there'll be a lot of opportunity, okay, where we'll be making a ton of money. All right, so let's take a look at the weekly chart. This is today's Tuesday, so we're sitting at these highs, 2 standard deviation away. Look at the 8-week and the 20-week. We're way away from that. I would love to see this come back down to the 199, even 200 in the S&P on the spiders. Here's the daily chart. And as you can see here, we're way elevated here. So this is something that why I like to really, again, get back to that $200 mark, which the 200 daily, the 20-day daily at the $200 mark, right around here. That's where I'd love to see this market come between now and next week. I don't know if that's going to happen, but even if it gets close to this area, even at 202, which would be this upper end of support, which was resistance, that's what I'm looking for. As you can see, we have done nothing here for the last 5 days, couple of days up, and then we consolidate yet again, and then again here. As you can see, we just chopped around here after that big move up. So it's very, very quiet, as you can see. So markets here are building energy, and as you can see here with the Bollinger Bands 30-minute spiders, we're starting to going to either do one of two things. We're going to break to the upside or break to the downside, and again, this does not tell you what direction. So we have to wait and let price dictate which way the market wants to move, and then we'll just jump on that train. Daily, as you can see on the diamonds, daily, we're way above the 20. So I would like to see this get down to that 173, 174-ish area, and then look to buy the market. You can see here, guys, no volume at all. no volume. And then we got this thin zone in here too with these volume profiles, and you can see that these volume zones, very very light. So we could easily flush down to that 158, and that's the IWM. Excuse me, the IYT. Now the IWM, which is one of the leaders that led this market up, and this is where I wanted to show you. As you can see, no volume, right? Okay, so we have a little area of support where we can get back down to that 20-day moving average. But look at this double top here. We had this double top, and now we're starting to falter a little bit, a little weakness in that Russell. So if that Russell were to continue lower, I think it will take the other indices down, as well as the transports. The transports didn't do too well the last couple of days. Now, again, it could just be consolidating, and that's normal, right? Lastly is the Qs. We get a little bit of a doji here, lack of volume, and as you can see, we have this thin zone that we can flush easily down to that 100, even to that 99.60 area. That's the lower end of that Bollinger Band. So let's keep in mind that we could have a possibility of a nice little move lower this week before we start to move higher. Now, the Friday after Thanksgiving, I don't know why, but 68 to 70% is always an up day on Friday. So just keep that in mind if you like to short the market. I wouldn't short it the day after Thanksgiving. And, of course, once we get into that official holiday season, you have to understand and realize that shorting is not a good thing, at least between now and the end of the year. So let's see if we get a little bit of a pullback, guys. And then if we do get that pullback, I think we get a quick flush, and then I think they buy the market into the end of the year. So we'll see. Have a great day, everybody. We'll speak to you tomorrow. Take care.